about are the people who are permanently losing jobs. That got completely lost in May's employment report. Everybody was so excited that we saw.
Okay, it's executed. I'm holding Euro USD at 125, 146. So let's change it to red color. Okay, and let's follow. Let's see how much profit I will get from this.
Income struggles, but you've got a job to go back to, versus getting up in the morning and thinking, I don't even know what kind of job I'm going to have. I don't know how I'm going to get back to work. I don't know how I'm going to apply for work. That kind of permanent job destruction, it takes years to come back from. And we're just now getting a sense of how much permanent damage has been done to the economy. And even in the good news today, my guess is we're going to learn that there's been more permanent damage done than we knew last month.
Betsy, can you quantify that damage that you're talking about in terms of where the year will end with the unemployment rate, as well as the percentage of Americans permanently out of the workforce?
Yeah, so my guess, I mean, if we're looking towards the end of the year, towards December, you can't really say anything right now because, the first rule of virus economics, as the great economist Austin Goolsbee keeps saying, is the virus is the boss. So we're seeing surges right now. That's likely to lead to more layoffs. So it's hard for me to predict because I have to predict the virus plus the labor market. Given that, let me say, I would be surprised if we had unemployment that was below 9% by the end of the year. And I think that getting those 9% of people back to work is going to be a real slog. And, a best case scenario is we get everybody back to work by early 2023. That's my best case scenario. So we really do have a long ways to go here, and we shouldn't get overly excited by the news we're going to see in the report today.
Betsy, appreciate your time this morning. It's valuable, so thank you for giving it to us. Betsy Stevenson there, former Labour Department Chief Economist. Tom Keene, that is the #1 issue for this labour market into year-end. Does not matter how bullish you are, how quickly you think we will recover, the consensus overwhelmingly agrees that at the end of this year, and this is a Fed forecast as well, we get towards year-end and we're still around 9-10% unemployment, and it's not good enough.
Right.
And once you get there, that's when the slog is going to begin. And what we're seeing right now is just a mechanical bounce back in the data. You go from shutdown to reopen, you bounce back. The real slog starts once we get to the other side of the summer, and that recovery will be a whole lot slower.
Yeah, there's any number of ways to look at this, John, and we don't have the time to, wax philosophical about it. The bottom line for me, John, is there are some optimistic houses out there. There are houses looking at a V-shaped recovery, but the recent virus overlay, all of a sudden, John, you're not out to the third week of July, or dare I say the third week of August. You have labor plans and family plans beginning to be framed for October and January of next year. That's what's new.
Lisa, this has been the story over the last 3-4 months. April became May, May became June, June became July, July becomes August, etc., etc. And as Tom points out, all of a sudden you're in fall and still struggling to normalize.
Yeah, well, and to the point that Tom was making about schools, we don't know when they're going to reopen. How can people get back to work, and how can we resume any sort of normalcy if everyone's kids are trying to do their schoolwork from home, which means trying to keep them away from video games, John?
I imagine that's a personal issue with Lisa Bravis right now. From Tom Keene and Lisa Bravis, I'm Jonathan Ferro on this Payrolls Thursday this morning. Good morning. This is Bloomberg Radio and Bloomberg TV. This is Bloomberg Surveillance.
Hey, y'all, Jeff Foxworthy here.
Hey, I'm Robin, one of the tech experts here to help you at Curry's PC World. I'm not just a voice on the radio. You can now come into your local store and talk tech with a human being like me. Just the news you needed this afternoon. We've put all the right measures in place to help you again safely in your local Staples Corner store. The tech experts are back in town, so come in and see if that fridge can hold enough for your hungry household. And welcome back to your local Curry's PC World.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
London. Toolstation are here to help get your job safely started and finished, with over 60 branches within the M25. All open with social distancing and contactless click and collect from 5 minutes. And with 20,000 top trade quality products to choose from. Order online now for collection in London branches and get £5 off when you spend over £30 with the code LON530. So, get your job started at toolstation.com. Terms and conditions apply.
The big Volkswagen event is now on. If you're after an approved used Volkswagen, for a limited time, you can buy one with 2 years warranty, 2 years MOT cover, 2 years roadside assistance, and 2 services all included at 8.9% APR representative. Hello, sir. Do any take your fancy?
I need to sit down.
The big Volkswagen event. With every type of car on offer, you may have trouble choosing. With Solutions Personal Contract Plan until 12th of July. At participating retailers on used Volkswagens aged between 90 days and 60 months only. Indemnities may be required. Warranty valid for vehicles up to 100,000 miles at activation. MOT cover is up to 2 years and is underwritten by UK General Insurance Limited. Volkswagen Finance. Contact your local retailer.
Whether you're dreaming of a house the size of a football stadium or a football stadium in the back garden of your house, what you need is dream come true money. Luckily, Friday's Euro Million Super Jackpot is a massive £110 million. Now that's dream come true money. Euro Millions from the National Lottery. Play online or on the app. Estimated jackpot rules and procedures apply. Players must be 16 or over.
Talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio.
No one at this point, analysts, companies, strategists, portfolio managers, has a great sense for what earnings will be in 2020 or in 2021.
You have a Fed that has literally looked into a television camera and said, we're just printing the money.
It's not about the discussion about whether there's going to be a recovery or not. Let's not confuse bounce with recovery.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance. Jonathan Farrell, Lisa Abramowitz, and Tom Keene. It is the most oddest jobs day ever. No question about that. You just heard Stephen Major of HSBC talk about the recovery that's out there, and it is a mystery. Already our conversations this morning have really showed the massive ambiguity we have going into 8:30 this morning, and then John's conversation with Lawrence Kudlow near the 10 o'clock, 9:50 hour as well. It is an extraordinary day, yes, an up market and some stasis in the bond market as well. But John Farrell, and we've said this all morning, it's not just about the payrolls report or the establishment survey. It's about the slew of economic data we get out today.
Well, Tom, it's also not just about the data. It's also about the reaction to it. How will the administration respond to the bounce that we're seeing in the economic data? How will it shape the fiscal effort through the next 30 days in the month of July, when quite clearly more help is needed? My personal worry, Tom, and I share it with many others as well, it's not that they don't do something. I think for many people, including the likes of PIMCO, it's a matter of when and not if they do more. But it's the composition of the package. Do they move away from offsetting the income shock towards incentivizing rehiring? Do they get the mix of the policy equation wrong. That, for me, is the big concern this month, Tom.
Lisa, we forget the scope and scale of this. We get into math and we go to our Bloomberg terminals and it all gets impersonal. And the fact is, the claims statistic today at 1.3 million, call it, I'm going to say that's 5, even 6 times larger than normal. We forget the scope and scale of where we are.
What to me summed this up was a chart from Torsten Slok over at Deutsche Bank showing that nearly half the American workforce is out of a job currently, that you can just see the participation rate plummeting. And there is a question, just going to Betsy Stevenson's point, how permanent will this be? How do we read this very messy data to give some inclination of that heading toward the end of the year, Tom?
Before we get to Tom Porcelli, John Farrow, I want one more thought from you, very, very important here. When we look at the data and all, we have to fold it into market reaction. Why are stocks going up, John, if we're so miserable?
Well, Tom, I don't have the answer to that one this morning, but over the last few months, I think the direction of travel matters. We have reopened these economies. The direction of travel is positive, but quite clearly in the month of June, a real tug of war has emerged, and I think we've got 2 separate camps in this market. Those that believe we will continue to see positive improvement that will drive equities higher, even if growth is anemic, and those on the other side of the trade that are more concerned about below-capacity economic growth for an extended period of time, weighing on risk appetite. That's the tug of war in this market playing out over the last several weeks.
A surveillance miracle this morning. We just got through the previous conversation, folks, without mentioning V-shape. We break that rule now with Tom Porcelli of RBC Capital Markets. Tom, thrilled to have you on here with Jobs Day. I know it's not a V-shaped recovery. Then what is it? Well, we've got some technical difficulties there. We're going to pick it up here as we're 25 minutes away from that report. Lisa, I look at, the idea of the alphabet soup, and I've never been a fan of it, even back to the days of green shoots and that idiocy as well. I think we've really given up on the alphabet soup, Lisa, haven't we?
Oh, I don't know about that. I was actually reading a story in the Wall Street Journal that was citing an economic survey out of the University of Chicago that called the shape of the recovery a reverse radical shape. They were talking about a reverse square root line. I mean, honestly, if you want to get to the alphabet soup, it's still going strong, Tom. So I don't know.
And John Farrow, this is so important because I'll go to Governor Bailey, literally he was 2 days on the job at the Bank of England, and he's talking about a V-shaped model coming out of the Bank of England. In the United Kingdom, John, have they amended the V-shaped certitude the Bank of England had,
Look,
6 weeks ago?
Let's just put the V-shaped talk well and truly to bed. When you reopen the economy after it's been shut down, the bounce will look like a V. But let's go back to what Steve Major of HSBC said in the opening of our program. The bounce is not the recovery. Don't extrapolate out the immediate improvement in the aftermath of a shutdown for the whole recovery. It's not going to look like this. You'll get that initial snapback, and then you'll start to see some plateauing. And I think on top of that, Tom, we've seen quite clearly across many states in the United States of America the limits of normalization. And if it's not the governors pulling back on reopening, pausing or reversing, it's businesses pulling back themselves. We saw that with Apple over the last couple of weeks. We saw it with McDonald's in the last 24 hours. We've seen it with the Walt Disney Company as well. It's been company after company after company. Tom, regardless of what these governors do, if businesses do not think it's safe for employees to come back, for consumers to walk into their stores, they won't reopen. And that's the big challenge for a lot of people at the moment.
If you're just joining us, our simulcast on radio and television, Jonathan Farrow, Lisa Bramwitz, I'm Tom Keene. As we drive to this Jobs Day, James Glassman's scheduled to be with us, among others. And, of course, all of this crescendoing through John Farrow's property, The Open, to a conversation with Lawrence Kudlow. Lisa, I look at the White House response to all this, and I would say that Mr. Mnuchin has really been out front. His testimony today, the other day, rather, with Chairman Powell and all. But what I would really suggest, Lisa, is the White House is going to have to really reform with the Kudlow interview today, whatever those statistics are.
Well, and thread the needle that both you and John have been talking about, and rightly so, this idea that there is some distinction between the economic recovery and the method with which this nation is addressing the pandemic. Those are one and the same, ultimately, at least in the views of Fed Chair Jay Powell, as well as Treasury Secretary Steven Mnuchin. A lot of people saying that how we address the spread of this pandemic is going to mark the economic recovery. How much are we going to hear that from the administration today is going to be a key question. I'm sure John will hammer on that. And I know that perhaps President Trump will signal his view on that later today at 11:30 a.m. as well.
We're going to reattach right now with Tom Purcell. He's with RBC Capital Market. Tom, just because of the time that we have left, what would you expect to see at 8:30? Is it the jobs report or is it the claims number that you'll pay attention to?
Well, I think because today's a unique day and that we're going to get both on the same day, which is obviously very unusual, we really need to pay attention to both. I mean, look, I think the risk is that you see a much firmer payroll report than is expected right now. I mean, our expectations that you could see upwards of 8 million jobs gained in the current month. Again, that's very consistent with the home-based data that we've been looking at. It's consistent with the idea that you saw claims, sort of improve to some extent over the survey weeks. But I think, and I heard some of your conversation there, I think what we need to keep in mind, though, is over the second half of June, however, you really started to see a slowing. I think, the rise in cases is obviously starting to scare people. So you started the home-based data, which we've really been leaning on quite a bit. It has really, at this point, started to sort of plane out a little bit. And you can see that in some of the other data as well, whether it is, open table reservations. I mean, you're starting to see some data really sort of stabilize here, again, on the back of what is, fear around the rise in cases. I would add one more thing, if you don't mind, particularly with regard to what you were talking about on the recovery and the letters and how you want to define it. We've been pretty clear on this. If a V-shaped recovery is a simple act of one quarter declining by a lot and the very next quarter increasing by a lot, you're probably going to see V-shaped recovery. But I don't think that's the right way of defining recovery. The right way of defining recovery is how long does it take to get back to the pre-COVID-19 levels of output. And in that regard, that's going to take well into 2021. So, I think it just depends how you want to sort of define recovery. But I think the right way is how long does it take to get back to pre-COVID levels.
Tom, in your latest research, you talk about this little inkling of a plateauing in consumer metrics. And I think what we all need to try and do, away from the professional world that you belong to, just outside of that, is try and look at the same data that you're looking at. Can you give us a better picture of the data points we need to establish where this economy is?
Yeah, so, and as we've talked about a couple of times, John, you and I think it's really about alternative data right now. I mean, it's funny, we say alternative data, which is now actually becoming mainstream data. But I think it's not the standard stuff, right? I mean, the unemployment rate and the payroll report, I mean, to be honest, they're not giving you a great read on where we just came from. I think things like that home-based data that I mentioned, I think that's incredibly helpful. There's still a free element out there that they're providing on their website, although now you have to pay apparently to get the live stuff. I think the DTS, right? The daily treasury statement. I mean, I think again, it's been out there forever. No one pays attention to it. But I think if you look at some of the tax withholding data, that's going to be really helpful. The open table data that I mentioned, Apple Mobility. I mean, there's actually a host of different data points out there that I think anyone, if they sort of wanted to, they can easily find it. Google Trends is another sort of great example. I mean, you could sort of define any search function you want and see how people are searching for it. I mean, there's a wealth of information out there that's really sort of leading us to conclude that June was, for the most part, a really good month, but you are now starting to see some slowing.
So given the fact that we are seeing slowing, what's your revised expectation for unemployment at year end? And what's your expectation for how we're going to get, or whether we're going to get a fiscal response that is commensurate with market expectations?
So our view really hasn't changed on fiscal response or the unemployment rate. We still expect the unemployment rate is going to be somewhere around 8% or so by the end of the year. So obviously, still very elevated relative to where we came from, but down from where we are right now. The one thing I think is very interesting on the unemployment rate is you have to be very careful with the unemployment rate. Even if we're right and you see a plus 8 million for today, the unemployment rate is probably still going to remain pretty elevated, and that's because of PUA, the pandemic unemployment assistance. That's a very elevated number right now, and we're not seeing that really move all that much. So that's one of these elements where you could see it show up in the household part of the survey, not the establishment part of the survey. PUA will not be captured by establishment, but it would be captured by the household. So I think in the very near term, you're going to see a very sticky unemployment rate. I mean, we expect the unemployment is going to be right around 14% for the coming couple of months. But by the time you get to the end of the year, we do expect some improvement down to 8%. And then again, even as we roll into 2021, there's a whole host of additional uncertainties. I mean, not just about coronavirus or COVID-19, it's about the elections as well. So I think that the unemployment rate is going to remain elevated relative to where we just came from.
Just a snapshot of the low visibility world we live in right now. Tom, always enjoy catching up with you. Enjoy the long weekend. My best to you, yours, and the team at RBC. Tom Porcelli there, RBC's chief US economist. In your market right now, elevated, as Tom pointed out, up 24 on the S&P 500, advancing 0.8%. 18 minutes away from the payrolls report from New York City. This is Bloomberg.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Good morning, Tom. Over half of all the states in the U.S. seeing a rise in COVID-19 cases. Several places in the South and West, including Arizona and Texas, reporting single-day case records. FDA Commissioner and White House Coronavirus Task Force member Dr. Stephen Hahn tells ABC's Good Morning America individual safety measures are key to controlling the spread, including wearing a mask in public.
The President's Coronavirus Task Force guidelines, we need to follow those guidelines. Follow your local protocols for screening, frequent hand washing, bring hand sanitizer. Socially distancing is really important, and if you can't socially distance, wear a mask.
And healthcare officials say it'll still be months before a vaccine is ready for the public. Live from the Bloomberg Interactive Broker Studios, global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. On a Thursday morning, I'm Amy Morris. This is Bloomberg.
NJIT, New Jersey Institute of Technology, makes innovation happen. NJIT faculty mentored Christoph Camacho when he was a student, helping him co-found a startup and patent a device that uses drone technology for reforestation and to collect value.
Stop placed on British pound at 125.12. Okay. If it will be executed, it will give us £200 profit. Let's see, and that's it. Position closed on British pound against USD, United States dollar, with £200 in profit.
Channels or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Influential conversations from Bloomberg.
For the friendships, for the fresh air, for the space to grow, for the knowledge, for the sport, for the outdoor education, for the wide horizons, for the academic excellence, for the future. Unleash your child's education at West Buckland School, a co-educational day and boarding school in beautiful North Devon. If you're moving moving to the Southwest for a better quality of life, this is education without compromise in what the Good Schools Guide called a gem of a school in an exceptional location. To see for yourself, find us at westbuckland.com.
Hey, I'm Robin, one of the tech experts here to help you at Curry's PC World. I'm not just a voice on the radio. You can now come into your local store and talk tech with a human being like me. Just the news you needed this afternoon. We've put all the right measures in place to help you again safely in your local Staples Corner store. The tech experts are back in town, so come in and see if that washing machine can handle all that laundry. And welcome back to your local Curry's PC World.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
Going to look good, but it's going to be in the rearview mirror, and it's going to be a dead cat bounce. And it's clear that the high frequency data and everything we're seeing says that we just hit a wall because of the spike in cases in the Sun Belt.
Professor Paul Krugman there weighing in on the recovery we've seen so far and whether it's a head fake for what's still to come. I think many people sharing that view, the consensus view being you get that snapback, that bounce, but the recovery will be a whole lot harder after the summer. From New York City this morning on this Payrolls Thursday, good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg Surveillance with around about 12 minutes to go until the payrolls report. Tom Keene, equity futures elevated, up 23, call it 24 points higher on the S&P. We advance around about 0.75%.
Well, our marching orders to our team, John, was to get a really smart set of voices with a broad cross-sections of take on economics, finance, investment. We've done that, moving from Ellen Zentner to Betsy Stevenson of Michigan to Tom Porcelli, and now always joining us, James Glassman of J.P. Morgan. He has a wonderful sense of the fabric of our labor economy from sea to shining sea. Jim, you've been on the road. You've experienced the pandemic airplanes. What are you hearing from J.P. Morgan clients?
Well, it's all over the map, as you would guess, right? If you're in the consumer products businesses, they're having a hard time keeping up with things. If you're higher education or municipalities, there's challenges ahead. But I think we've done a good job. We had 40 million people basically